Hey guys, thank you for joining us today. This is a little bit different format than usual. This is a GP focused segment, and I'm joined today by Jinil Patel. He's already an accomplished entrepreneur in his own right. He grew his business by effectively managing teams and overcoming adversity. And those are going to be some very important transferable skills as he takes on going into multifamily investing and taking down his first apartment deal. So I want to turn it over to Jinil to let him introduce himself and let us know how some of the skills that you have gained from being an entrepreneur and how they will transfer over into you being an effective general partner in a syndication. Janelle, take it away.
Eric, thanks for having me. Very excited to be here. Thanks for the opportunity. Very excited to get into apartments first and foremost. Real estate's always been a long passion, and I'm excited to be this far into the venture that we've just recently started. Currently, I own 2 franchise restaurants here in Michigan, and as you know, restaurants are an everyday thing. It's managing every single day, watching the numbers every single day, and it is extremely hands-on. And I think apartments are very similar, and it can be a little less hands-on. However, it's all a numbers game. As long as the numbers make sense, the returns make sense, the GPs are happy, and so are the LPs first and foremost. So very excited for this opportunity and for any future partners that we're able to gather.
Awesome. Well, we're going to jump right into it, man, because I want to start off with asking you, what are some of the specific value add strategies you have planned for the property, and what milestones have you set as far as implementing that strategy?
Yeah, absolutely. So the current property we have, it's 48 units, and the current seller, they're looking to offset it due to the large size of their portfolio, and this being kind of a smaller property for them to manage. Again, creates a really strong opportunity for us, where the current condition of the property itself, it's in very fair condition. However, with some minor updates and quite a bit of cosmetic updates, making the units look more modern, there's a opportunity to increase rents from anywhere between $100 per unit to $250 per unit, as the current rents are about $200 below market rents.
Okay. Well, that leads us very nicely right into the next question, which is, what is the current occupancy rate and tenant demographics, as well as how does that align with the target market after renovations?
Yeah, no, I think the target market is going to be the same. The current occupancy for this property has maintained above 95%
Wow.
for the last several years in the current condition. And they're all blue and white collar tenants. Even though the campus is about 1.5 miles away, our primary target are going to stay to the blue and white collar tenants. So the students we would only dip into if occupancy ever became an issue. And again, with their historical track record, occupancy has not been an issue. So I see a tremendous amount of opportunity to go in there, do some renovations, and provide a much better and higher quality units to this working class in exchange for bringing the rents up to market rents.
And that lends to the next question as well, because I wanted to ask you about what contingencies or risk mitigation strategies are in place for unforeseen challenges, such as delays and market fluctuations.
So the current, risk mitigation strategies we have in place, we have set aside about a 10% for our unexpected costs, and putting extra funds in our cash reserves to ensure there are no deficits. And we have a very competitive rate locked in today's market, where everybody's in the mid 7s to low 8s. We have an interest rate locked in at about a 6.75% on a 5-year term. So this way, when the rates do fluctuate, our target is to refinance in 2 to 3 years. And we believe that at the end of 2 to 3 years, we'll be able to be closer to the 6% interest rate.
That's awesome. Is there anything else specifically that you have in place for the market that is maybe some unforeseen issues?
So, Eric, as I was mentioning, right now the rents are about $150 to $200 below market. And even though there's a potential to bump them up by, anywhere from $200 to $300, I think just due to the high demand in this particular location, just being right in the centerpiece of downtown, towards downtown of the main city, as well as the campus, and having transportation available in walking distance. The property with the current occupancy, it's cash flowing positive. So even if we weren't to implement a rent increase, the investment would be in a very strong position, even without any rent increases.
Okay. And I know you did mention about refinancing after 24 to 36 months. With your value add strategy, the property is expected to gain quite a bit, correct?
Absolutely. We're looking to create about anywhere between $1.3 to $1.6 million after the value add phase.
Okay, that's awesome because with that forced appreciation, that gives you a lot of cushion and a lot of room to pay back your investors very handsomely. But on top of that, too, I know that we spoke offline. You have a buffer. I think it was like 5% occupancy dip and also like a 2% delinquency for rents as well. You still have that contingency in place.
Absolutely. So we have planned for anywhere between 2 to 5% in delinquencies, and just based off of the historical trend for this particular property, their delinquencies have been only in the hundreds of dollars, not the thousands, just over year over year for the last several years.
That's awesome. That's always good to hear. And obviously, you know what you're doing. You have a plan laid out. I know one thing we spoke about offline too is that you are going to be providing regular reports for your LPs throughout the process too to keep them abreast of what's going on. What is your plan for that time frame for the reports and what's going to be included in those?
So we'll be providing formal quarterly reportings that will lay out how many units we've renovated, what rents we increased, and what we plan for the upcoming quarter. Along the way, I'm more of a personal and a friendly guy myself. So I plan to make monthly phone calls to each investor just to kind of keep in touch. I don't want them to feel like, we've earned their business and we no longer have a need. I personally plan to make monthly phone calls to each individual investor to let them know exactly how the process is playing out.
Man, sounds like everything is set up for this investment just to handle the risk and stay on track based on your game plan as a GP. I wanted to ask you though, based on your vision and strategy for this property, what excites you the most about the investment and why do you believe now's the right time for investors to hop on?
Well, I strongly feel, this property is very exciting primarily because of the location. One, it's right behind a hospital. Two, it's right off the freeway, meaning you can, pull out of the complex and go right onto the freeway. Three, it's right in the middle of both downtown and a university campus. And again, having that access to transportation that's in walking distance and you can go either direction, I don't think, there's not a single tenant we would ever have to turn down. A tenant wouldn't need a vehicle to be able to live here and work. They could go pretty much anywhere in the city in any direction. And like I was telling you before, they have maintained above 95% occupancy just for over the last several years. And we see that high demand to continue carrying as a majority of the year. These properties are occupied about 100% of the time. So we feel just based off the current rents, it's already cash flowing positive. So the risk of running into a deficit, seems to be, a little bit minimal. And to really latch down your investment and be into something that's, that can be considered quite safe, I think this property, due to the demand and the high occupancy, I think it's an excellent investment.
I really appreciate you in providing so much insight to the investment, the area, and your passion around this project. I'm really excited to see what's next and how investors can get on board with this. Just wanted to ask you, actually, that part specifically, how can people learn more about this investment and get on board and become a part of this promising project?
Man, I'm always available by phone, email, or text, or you can also, DM me on LinkedIn. I'm a personal guy, Eric. I always prefer to have a phone call to let somebody know, you get a real feeling once you really hop on the phone with somebody.
Absolutely. And as you know, managing a business, that personal touch is one thing that will set you apart, just like it has in your businesses, your entrepreneurial journey, and now this new step that you're taking as well. So that will definitely set you apart from the crowd. I appreciate your time today, Jinil. I will make sure I put your information up so everyone can get a hold of you. And we look forward to hearing more about your journey and seeing you through the end of this.
Eric, I thank you so much, man. I appreciate your time and appreciate you taking the time to really talk with me, and very excited about this future. We're getting very close, and we'll be on to the next one shortly.
Absolutely. And that was the next thing I was going to say there. I can tell from talking to you and your passion and how much thought you put into this project that there will definitely be more to come from you. And I'm looking forward to
Absolutely.
seeing it.
100%. Thank you so much, Eric.